everyone. I hope you guys are doing well. Let me try to adjust my light because I am very bright right now. And I'm here going live for you guys to do a Q&A session because many people have questions about their credit. And so tonight I will be touching on a topic. So as you guys come in, feel free to post your questions because we're going to get into some things. I apologize for not being consistent for these past couple of weeks. But like I said on my other video, the issue I was having, unfortunately, my brother passed away suddenly. So I was traveling and I was not able to go live. So on this business channel, the purpose of the channel is to help you guys to the other part of credit that a lot of people don't understand what their problem is. And one part of your credit is based off income. So when you are dealing with your credit, applying for things, looking for an apartment, income plays a huge part, okay? Thank you for checking in, Brandon. Thank you, Steve. All my faithful people that's coming in. Thank you, Miss Jackson. Thank you for joining me. And credit, income is a big part. Do me a favor, you guys, give this video a thumbs up as you come in. Make sure you guys thumbs up the video for me so it'll help the algorithm. When it comes down to credit, income plays a huge part. And like I said, the reason I wasn't consistent, unfortunately, my brother, he was young, 48, passed away, really suddenly. And this is an important part for everybody. He was a single dad. And sometimes when you don't really share your affairs, you don't know where items are placed, life insurance and things. And when it comes down to making arrangements, that stuff happens pretty quickly. You don't have a lot of time. Thank you so much, Steve. Thank you so much, Stephen. I appreciate it. You don't have enough time to prepare. So I want you guys to take this on this business channel. I'm addressing questions, but I want you to really think about this. You definitely just don't need to focus on credit alone. You need to handle your affairs and have enough income, okay? And the reason why I say income, the thing when you lose somebody, the one thing we were all comforted by, it was three of us, but me and my other sibling and my parents, we did not have to stress over arrangements that everybody is financially stable enough that it was not even a thought that you can just deal with grief. So you want to put yourself in a position where you don't have to worry about things getting done. That if you are unfortunately put in a position, the last thing you need to worry about, even when people have life insurance, like I said, sometimes if you don't know where everything is for that person because they didn't, abreast you on that, and you have to go to their home and try to sort through this stuff, you want to be able to not worry about putting loved ones away. And a lot of people have issues with your credit because you can have a spouse, or there could be even if a lot of people are really responsible people in their family, and you might be stuck with a burden of burying a parent, so those kind of things where I have had clients and conversations with a couple of clients, that's where their credit debt came from. They had a large credit line, and nobody in the family really was in position to handle some arrangements. So they did that on a credit card that cost them $14,000. So this is why you want to always focus on your income. I'm going to tell you guys, income, if you have enough income, your credit and financing really wouldn't be a problem. Let me say that again. If you have enough income, if you have enough savings, it comes to a point, thank you for joining me, Marvin, that credit is not going to be a problem. The more money and the more income you have access to, or cash flow you have access to, the less dependent you will become on credit. Let me state that again. The more cash flow, the more savings you have, the less you become dependent on credit. Then banking institutions have no problem to lend to you if they see there's finances already there, okay? If it's income already there. And many people come into credit problems because there's some kind of hardship. They might lose employment. They might lose a loved one. If you're married, you could lose a spouse. You could lose, income. And there's just not enough there for you to pay your bills at time. So I never met a person that ever said, hey, I just plan to jack up my credit, and that's just what it was. No, some kind of life event took place, or they just didn't have enough knowledge. So those are going to be your two issues. So actually on Monday, I'm going to drop another video on ways that you guys can make money here on this channel. This can be an idea for you, but it doesn't have to just be the only way that you decide to make income, extra income. Being a landlord, invest in that way. You might have a whole different skill set that you might want to go into to create capital, because I'm telling you guys, inflation now is getting very high. A lot of you guys want to fix your credit because, you might want to go and get a home. You want to do some lending, but the banks are pulling back now of lending. So this is why I'm telling you guys that you got to focus on your income. You really do. You have to focus on multiple streams of income. Some can be active, like your current job is good if you got a good paying job to leverage that. But you want to also look for other ways to create income, whether it be active or passive, okay? It's going to be very important coming up with these changes. A lot of you want to buy a home. As you can see, inflation is causing the home prices to go up, plus a shortage of homes. So home prices in some areas have went up 30% higher. And the interest rates are now going up because the Fed is trying to cool down this inflation. So what I'm telling you, when that happens, lending get very tight. Okay, so you need to start to make more income, because that can open the door up for you. Even if you are dealing with troubled credit, there's now fintechs. Okay, fintech companies where if you can show income, you can get lended to. So you want to look into some of these options. You can also look at, if you're trying to rent certain areas, like where I'm like, property is in the Northeast. If credit is not there, it's going to be very tough. Okay, and if income is not there, it's going to be extremely tough. Some places in the South, if you have the income, the credit is not so much as an issue. But now some of these places are even tightening up too. A lot of these places in the South want 3 times to show 3 times. And you say, yep, rent is going up from $760 to $890 for 1 bedroom. Ain't no way Now, where, Steve, if you can, tell me where you're located, because that's going to be good data. Because you're saying that's for a one bedroom. That's that's a godsend for with me being in New Jersey, like a one bedroom. Okay, San Antonio, Texas, absolutely. That's a and from in Jersey, one bedrooms are probably running like 1800, like, and two bedrooms are now probably like uh two bedrooms are probably like 2200 a month, going to 2700 a month. So if you're in places like New York, New Jersey, I'm sorry, blue states, let's just call it what it is, California, Maryland, your rent, y'all, have went up. Okay, and I'm a landlord, and I'm looking like, I don't know how people is doing it. I'll be honest, I don't know how folks, and I'm talking about places like Newark and places like that. If you're looking for a 3 bedroom, you're looking at 1900 a month. I mean, you're looking at a lot, and people are paying. I'm in Colorado. Yep. And that's wow. So Colorado is the area where she's saying is 1890 now for rent. So who wants to be in that position for the rest of your life? You need to up your income now, unfortunately, because now the home prices are inflated right now. Hopefully, the market will make a correction some kind of way if the interest rates come down. But in order to qualify, Miss Jackson, let me know what's the medium home prices in Colorado. I'm quite sure it's pretty high if you in that Denver area. I know in New Jersey and Central Jersey, suburban area, Central Jersey, home prices is starting probably for a single home anywhere from like 430,000 in the town that I was living in, and all the way up. So for you to qualify for that, generally you start with your income, your annual income, and they times it by 3, and that's the starting point for where you can qualify. So if you're making like 40,000 a year, you're looking at only qualify for 120,000 for a home. And if you have student loan debt, you have car notes, all of that reduce what you can qualify for. So you can adjust that. If you got student loan debts and other things like vehicles, just a caveat, don't go out and get a new vehicle before, if you're looking for a home. And you're saying medium home prices is about the same, like 500,000 starting. So if you're a single person, I don't care if you're a married person, to try to qualify for a single home in Miss Jackson's area, you're talking about you have to close to be, even two people, like close to making at least 72,000 to 100 grand, okay, right now. And before, the interest rates was lower, so you can afford more home, or you can afford those higher home prices. But now they're raising the interest rates, the less that you can qualify for. So income, if you can find ways to show that you're making other streams or revenue of income, is very helpful moving forward to you guys. And it's going to help balance off those issues with your credit. Okay. So make sure that you think about what I'm saying. Income is very important, especially in this new climate that inflation is going up. The Feds is pulling back on lending. That's going to make the commercial banks pull back, which your local banks is going to pull back. And a lot of you guys looking for credit cards and things. So things are going to get real tight now on what they're looking for. Okay. So my manager came from California, and she put in a bid of $80K over the asking price, and she got outbidded. And yes, it is crazy. It is crazy. It is crazy, because that's the scenario for a lot of people that's going forward, and especially in certain areas. So with Steve, I think even San Antonio, like you said, the rent, the home prices there are getting higher all over than what they were previous uh, pre-pandemic times. So you got to think, y'all got to be very competitive on the income portion and start trying to have um, at least to show some kind of savings. Okay, so we already know in this time of high inflation, savers are losers. And so this is what another part that you got to be astute on. If you are trying to improve your credit, you need to know how the market is going and what pendulum that the banks are swinging. What is the economy doing? Because that's going to dictate on you being linked to, like even with credit cards and things like that. The harder the economy is, the higher the inflation, the more they start tightening their belts on lending. So that's going to trickle down to you as a customer too. So you got to think about these things. Also, think about when you are going for credit and you're trying to improve your credit score, whatever is necessary for you. Let's say rent, you're in a position where you have to have housing. You need to make moves differently to affect your credit score in that way. Okay, so a lot of times what you guys can do, because that's necessary, you got to have housing and you got to increase your credit score as fast as possible. You need to, whoever you are dealing with, the landlord, even let's say the realtor group, before you have people to pull your credit and have different, especially if you shopping for or you just trying to find an apartment, or you trying to find housing, make sure that you take the time and monitor your credit. Make sure what you have on your credit, what's your current credit score, and ask the company, what's their credit requirements? What's their income requirements? Because a lot of people lack this. So don't go in there trying to get a place and having them to just pull your credit and cause a lot of hard inquiries without doing your research on what's their requirements. If you can, if you have a credit monitoring system, show them your report. If you can sit down with the realtor or the property manager and ask them, will your score be acceptable with what you have before they even pull? See if that's possible. See if you can send over a copy, and they'll probably say, no, we have a more detailed. That's fine. We pulled, differently. That's fine. You just want to get an idea. Does this look like something that you would take if you have some credit issues? Okay. And I'm talking about, like, let's say charge-offs, collections. Sometimes those things, you don't have enough time if you have to move to deal with them quickly enough. So those things might have to be there, and you want to increase your credit score by adding or finding unsecured lines of credit. I just did a video on the extra debit card. That can be an option for you to add an unsecured line of credit. Something like that, where it's not going to be a hard pull, but you can get that line of credit reporting to at least 2 of your credit reporting agencies. And I'll have more cards like that to help you guys that need a quick way to increase your credit score without causing that hard pull that will bring your credit down. Okay, so you can add something like that, and if you add it in the right timing, you can see an increase on your credit score when it reports. Okay, so you want to consider these things. What are you going to get? What are you trying to get qualified for? So if it is a housing, an apartment, to rent a house, make sure you know the rules. Okay, make sure wherever you're looking for, don't just aimlessly pull your credit. Make sure you know the qualifications and do your due diligence. Have your own credit report if all is possible. and ask them, hey, do I look like a fit? If not, I'll just keep it going. And they usually will tell you your income requirements. A lot of times, I know in that Texas area, they want 3 times a lot of places. So they want 3 times the income for the monthly rent. And some of them are deducting if you have car notes or whatever is reporting on your credit report. So you got to keep that in mind. So I just wanted to do that for an opener so you guys can just think about those things. And I see some questions that came in. And let me, Miss Jackson said, my man, okay, that's from California. Okay, this may be a silly question, but does paying down student loan debt raise the credit score? Um, Paying it off, well, that thing, it can work 2 different ways. So it depends on how long it's been sitting on your score, because sometimes if that student loan debt been sitting there for a long period of time, it can kind of weigh your score down. But what one of the main, but the other part, if like anytime you have what like a student loan debt is like an installment loan. So you have set payments that you pay every month, just like a car loan. It's an installment loan. The tricky thing about installment loans, when you pay it off initially, it can cause your score to go down, maybe for 2 or 3 months. And the reason why is because you're closing an account and it temporarily shortens your age of credit. Okay. So it can cause your score to go up if you do it in the right timing. So the benefit of paying either down your student loans or off your student loans is when you're going to be qualified for whatever, a car, home, or whatever is there. Now you can qualify for more because your income itself is not paying towards this this debt that you have every month. So if it will benefit you, and if you pay it off, you may see your score initially drop. You will see your score initially drop, maybe for a month. And a lot of y'all that had car loans and you paid it off and you thought, oh, well, my score should shoot up. It may initially make your score go down because it shortens your age of credit. Now, but on the qualification side, that being closed, it benefits you for qualifying for more. Okay. So, always understand about credit. The score itself sometimes is not only the only factor. It depends on what you're trying to get approved for. So in that case, if you're saying student loans, paying it off, let's say initially it make your score go down, but you're trying to qualify for a home, FHA, and they might only need like a 650 credit score. Like a 650 credit score. And usually with FHA, on the government side, they only require a 500 credit score, but banks put their overlays. But you pay that off, it might drop your score a little, but you can qualify for much more. So you always have to look at the situation. And this is where I'm saying to actually where we get in credit education. It's beyond just score this, and that. You want to look at what am I going for? What is going to put me in the best position? Okay, because there's some people, don't get it twisted. There's some people that might have a let's say 780 credit score. They could have a 780 credit score, and another person might have a 680 credit score, and they can get qualified for way more. And the reason why is their debt to income when it comes for a car, if it comes from a loan, it it all. And somebody say a higher mortgage loan, not necessarily. So it enabled me for a higher. Oh, I was mad, but like you said, oh, okay, yeah, yeah. Yeah, you're exactly right. That's what happened to me this year. Yep, I was mad, but like you say, you qualify for a higher mortgage loan. And it's true because you have and that's where when it goes to when you're trying to qualify for a mortgage. That's why I tell y'all it's not always good to apply for self and pledge loans. It's all depend on what you're doing, so some people are, and it's not like people are like lying to you or misleading you, because some of these things will improve your credit score. But if you're trying to qualify for a home or a car, certain things like that, like say pledge loans and all of that, can be beneficial if you're trying to build credit, but you're really not making any moves. You're building credit. That's why I tell y'all I don't really advocate for that, because most of the times if you add unsecured lines of credit, which is dealing with utilization, that 30%, that's the quickest way to increase your credit score. If you're under a 700 credit score, you can increase your credit score if you're over a 700 credit score, but you don't want to add new lines of credit. You can get a credit line increase from your banking institution on your current credit cards. Now, it depends on who's your credit card company. Like Amex, you can increase your credit lines with a soft pull. So it all depends on how it works. I'm going to drop a video. Navy Federal, I increased the credit line and it was no hard pull, but I did it through the app. It's certain ways you got to do some things, but it was no hard pull. So it can be beneficial. And my score is over 700. So for me, adding a new credit card will decrease my credit score. Okay. So it all depends on how you going about it. That's why I said for those that follow me here, that's really not just looking for talking points, that's just not on that hit it and quit it, or I'm just trying to, credit is, that's why I tell y'all it's not about credit repair, it's about credit education. Because I just about guarantee. This is why I really stopped doing the consults and stopped working with people. To tell you the God honest truth, I went through people, spent like a good hour going through people credit reports, telling them, oh, you need to do this, you need to do that. I thought that would be beneficial to people. Some of these people increased their credit score within, what, a year? I mean, not a year, like in 4 months, they were probably like over a 700 credit score. And we're talking about people that started under 580, because I looked at what they needed to do personally. But because I told them what they needed to do personally, they didn't really absorb the why they were doing this and really the education part. It's just like, oh, well, you add this or go and apply here, you'll get, and they saw it working and it worked for them quickly. Majority of people within a year, their score was back down. That's where I said, wow. And I was talking to people one-on-one. They had my personal number. They texted me all times of the night, texting me, texting my phone. And then it's like, oh, I messed up. I forgot to pay my credit card on time. And we're talking about they'll do like, they did that like within 5 months. And then here they are coming back to me. And I'm not in it like that, because I'm not credit repair. I'm not like, don't think I'm in it to like, that's a whole business that need to be set up. And I'd rather tell you what to do and just apply it. And it's true. People are constantly going to go through that cycle, not because they bad people, but what I realize, as me, as being what I say, a credit coach or a teacher, teaching people, that's where I needed to do better. I was just telling them, you need to say, if I look at Stephen and say he just had, let's say he had an issue with utilization. And his thing was he had small credit cards, right? And he kept go over utilization. We looked through it. And I tell him, look, this is your problem. This credit card is killing you. You got to make sure you pay that down. And for us to cure this, we got to get you a bigger line of credit, because if you get small credit cards, if you take notice, every one that they send you after will be a smaller credit card. So I would tell people, okay, add this trade line, say like certain things, like my jury club was giving people $5,000 line of credit. Now a lot of people was bitter about it, but they didn't use it like where I hear online. People didn't use it like the way it's supposed to be used for. You were supposed to let that line of credit report, then immediately go and apply for another line of credit. Like, let's say if your stuff was clean enough to go to Discover or somewhere else, or like I told y'all, furniture accounts, to get a larger credit line. And then you can get a bigger credit card. Because if you've been following me, as I told you, the larger the line of credit you have, the more apt that the next bank is going to give you, either match that line of credit, sometimes exceed that line of credit, or just about meet close to, maybe a little shy of that line of credit. So you got to get to the bigger credit lines. So what he might need, and he just take those steps and his score shoot up, he really might have not saying I worked with Stephen, but I'm just saying, for an example, he might have not really known why, or why did that work for him. So if he already had bad habits of not paying his bills on time, not being astute to paying his bills on time, or over leveraging himself in another area, then he look up and a year later, he took a L, like on somewhere, and he just don't understand why. So a lot of people, it'll be a perpetual cycle that's going on. So you want to be mindful of that. It's best that you learn. And then, because credit, as I keep telling you guys, credit is an algorithm. It's based off of your behavior. You just got to know how to behave. That's it. You got to just make sure. How do you break the cycle? Thank you to Live for this. Is 2 ways that you're going to break the cycle. And it's very simple. Behavior, and that's through education. So take example, somebody that have a weight problem. So they constantly go on crash diets, and then they gain the weight right back. So say they just follow, some people eat the cabbage soup diet. We all might have heard of that. And because they're eating a particular thing and sticking with a certain regimen, they lose weight. But then they go back to their old eating habits. So they have to educate themselves on what to eat, on nutrition. It's the same thing with your financial. You got to think about that with your financial. Same thing. It's your behavior financially that's making you come on the system. You don't have knowledge somewhere. So it's your financial behavior. You got to know your spending and how to leverage credit and what not to do with your credit. You got to know, for example, let's say with the weight loss thing, not to eat cake. How many calories counting? What's the micro level of eating calories? There's levels to financial education and credit education. So you can just be a person that we all know, input, output, like with dieting. Input, how much you eat and how much you exert out, you lose weight. That's the basics. But there's some people, bodybuilders, that look at macros. You look at proteins, leaving carbs out. When they eat, intermittent fasting, eating at a certain time, that they excel on that. and their physique, they might look like they weigh more, but then now they got muscle. They look way better. Same thing with your credit score. There's bull crap that you can put on your credit, and that's what I'm answering. There's bull crap like self accounts, and then it might look good, or what people say, you look slim fat. You know, that person lost weight but still got the same body composition when they was fat. So instead of hitting the gym and putting the right stuff on there by eating right and putting on weight, that's the way you can do your credit and your financial profile for yourself. You can put on weight. So instead of getting car loans, you like 50 years old, you never own real estate, and all a bank look at, because they don't know you. You know what I'm saying? They don't know you. So all they know of you is your credit profile. They don't know you as a person. They don't know your credit worthiness. You know, they're just going to judge you on paper. So if they're judging you on paper, and let's say a person is 50 years old, all they had is car loans, they're a renter, they never own real estate, you won't get as much, okay? Anytime you own real estate, you're going to be able to qualify for more if your debt to income ratio is better. So you want to put certain things on your profile. So I hope I'm not getting too deep, but I'm just saying is certain things that you want to put on your profile. And the reason why real estate is because they have something to come after. Let me say it again. They have something to come after. So when you ever make a misstep, if you own real estate, they can put a lien. See, the bank is not about gambling. That's not primarily what even though they did on Wall Street, but primarily they want to limit their risk. So this is why they have things like collections. This is why they have things like credit scores. All the credit system is made for is not made for you. It's made for the banks to judge your credit worthiness, your risk factor. Okay? So to cure that cycle of bad credit, education. That's the first thing. And you got to know how to dress your profile, how to dress your credit score to look like a good risk to the banks. Okay? That's number one. So it's going to take education. How to look like a good risk to the banks. So if I see that, okay, a person is a renter, a person just invests in car notes, they got some credit cards, and they got student loan debts, that I can't recoup from that unless they got a good paying job, and it look like you've been on your job for a long period of time. And we're going to get into that on how to dress up your credit profile. So it's certain things you can learn how to look like a real good risk to the bank. So not putting self accounts, they already know that. That's why I tell y'all all the time, I don't like secured credit cards unless a secured credit card is going to convert to an unsecured card like Navy Fed, Discover. Putting a secured credit card on your credit profile, and a lender is looking at your credit profile. You might say you got a 700 credit score, but I see these are secured credit cards. It's a secured credit card. So it's training wheels. So nobody trusts you enough to give you a card without you putting down a deposit. That's why I tell y'all unsecured lines of credit. It just look better on your credit profile. And people, how they know? They know. Just like they know now, your authorized user accounts is authorized users. It say it right there on your credit report. So back in 2015, stuff like that will look like it's your primary, where you could slap on an authorized user and get a big line of credit because your mama had a big line of credit. It don't work like that no more. So the education part to make yourself look like a good risk, it'll stop that cycle because you'll know what to do and what not to do. The second part is income. That's it. Is second part, streams of credit. Like I said, the reason why I started this business channel It's because most people got into problems with their credit simply because they ain't have enough income. They lost their job and no income was going in. So you want to have multiple streams of income. If you have enough savings and enough cash flow, you're going to be able to pay your bills. That's it. I promise you, if you do those two things, you'll break the cycle. You ain't never going to have a credit problem again. If you have diversification in your cash flow, okay? And I'll use myself for instance. Y'all know I'm a into real estate landlord. Jersey was hit with a hard moratorium. Homegirl on one of my units ain't get. A tenant ain't paid me 14,000. I just dipped. 2 years, people wasn't paying their rent. 2 straight years, and you still got mortgages. You still got to pay for insurance. So it's because I had other streams of income. I didn't bat an eye. You see what I'm saying? And so you don't want to be too much invested in anything in order to keep good credit. You can't be, even your job. Don't be that invested in your job. Not saying you shouldn't be dedicated, but you should have other things going for yourself. Have other investments. Have other streams of income. So that's how y'all gonna break the cycle. I promise you. It might seem deep, or it's just gotta be like that in life if you're trying to win. Trust me, I have had missteps myself, and I had to get it back going. So this is the whole thing. You might catch a bad one. I caught a bad one in the investment realm. I caught a bad one. But what's going to pull you out if you got other streams of income going? If you got other investments, don't let anybody tell you, even real estate or whatever, stock market, as they always say, don't put all your eggs in one basket. And that's a job basket too. You want to break that cycle of what you got going on. Okay, so Joanna, she said, I tried the cabbage soup. Every female, we all tried that cabbage soup diet. And you said, so write down expenses and cut back on overhead. Basically, that's basically what you want to do. But you want to put it like this. Shaq said it best. It was a difference between being rich and wealthy. And he said it was one gentleman that told him who's wealthy. He said, the difference between me and you, he said, you're rich, and you might have an abundance now, but for me, I'm wealthy. My kids is going to be able to have riches and wealth because I'm set up differently. It's not about how much you make, like he told him, it's how much you keep. So that's the whole thing. Like you saying, write down your expenses and your overhead. But what you always want to focus on is keeping a large part from your expenses. So you want to be able to store. You want to be able to store and then have a portion to invest. That should be the basis. That's what I'm always doing. I'm always looking at my future. And you said, when I did a bit more research, I realized specific diets was better for people and having, that were going to have heart surgery. Exactly. And sometimes that is based off of, like some people, body type. Certain times, even if what certain diets is for certain blood types, certain cravings. Also, certain diets are better than for people where they have, I think Dr. Berg talks about different body types, adrenal body types. And I can attest, working out, you need, there's, certain workouts, they'll tell you, you can judge what type of body type that you have. So working with body types, even with females, weight training. I mean, we're doing this the same as credit. Oh, females, I found out if you weightlifting, women know a certain time when you're a certain time after your cycle, your what is that? You're lacking basically estrogen. It's harder for you to lift weights. You lose a lot of strength. So there's different ways that you can even get down to your credit like that. And we're gonna dive into that. I'm gonna actually make a video about that. There's certain ways to maintain good credit. Your stuff might be off, but there's certain ways to high utilization. You can high utilization. There's certain ways that you can manipulate your credit if you know how to manipulate your credit. If I know I'm going to do something, I'm making plans on doing stuff. Like, say if I have to go qualify for something. There have been many times, let's say my money was messed up. I knew I was riding really high on my utilization. I ain't care because I knew I wasn't doing nothing. So what I care for right now. But when I'm about to go and get qualified for something, I make sure I pay down that credit card before the report date. And then I know at this time my credit score is going to shoot up. So when you have knowledge of certain things, you know how to move. You know how to manipulate. Remember, y'all, credit is an algorithm. You can manipulate credit. Just like you can manipulate your weight. You know, you can lose a lot of water weight. Boxers do that all the time. Weightlifters all the time. You know, just for weigh-ins. Go to sauna. Is it true? No, it ain't they true weight, but they know how to manipulate things. They know how to dry out. You can do the same thing with your credit. If you learn, you know how to manipulate your credit at any time, any place. You can make your credit score go up or down, or don't even care because you know I'm not making a move right now. Now with FICA 10 though, you got to be careful. Now is FICA 10 now and that stands for trending. So they are trying to track your trending debt. But if you do your research, if you're like me and with your credit, you doing your research before you apply, you should already know what kind of FICA score they're using. FICA 8, FICA 9. What are they judging? Are they using a FICA 10T? So you look for lenders that's working like that. Sherry, is double paying your credit card a good thing? It depends on the timing. So let's say if you're saying double paying your credit card. Say if you a person that you maxed out your credit cards or your credit card debt is high. I tell people every week. It was times when my credit card was like maxed out and I could have, let's say I could have paid it off or maybe money was tight. I ain't want to put the finances there. Every time I got paid, I would pay, let's say $50 of what I can afford. I'll pay on that card over the 4-week period. I'll make a payment there. So I'll just call and pay it in. And then come the time of the month, I'll pay the minimum payment, and I'll do that constantly. Is that helping your credit score? Yeah, because what happens is when that card report, if you're doing that off those off days, the off weeks where that card is reporting, is not reporting, about time that card report, you done paid down that card. So you're reducing the amount owed on that card. So anytime you reduce your utilization, you will see your score go up. Okay, so it can be beneficial in that way. But making double payments, if you thinking like it might help you with the lending institution, not necessarily. They just looking at if you're paying that card off on time. But where it can help you paying bi-weekly, like on a loan like your mortgage, you'll pay your mortgage down sooner when you do that bi-weekly schedule. So it all depends on what you're trying to do. So I always tell y'all, always keep in mind, as I did these different scenarios, it all depends on what type of lending and what you're trying to do. So with my mortgage, paying bi-weekly, doubling 2 payments a month, it helped me pay down my principal and pay that loan off quicker. Okay. But if it comes down to paying down your credit card, you're doing it for your utilization to hurry up and get that card down. But if you're doing it just because say you use that card and you're trying to build a relationship with that bank to show that you're able to, and you paying it on your pay schedule to make sure that when that card report, that utilization is not hitting your credit. So it's different ways that you see all seeing it. So just always remember, all of y'all on this line, nothing is going to be the same. It depends on what you're trying to achieve, okay, at that time with your credit. To make it simple, always focus on what you're trying to do. So if I'm trying to qualify for a home, I'm going to do something different for my credit than trying to qualify for an apartment. It's going to be two different ways I'm going to attack that, because it's two different lending requirements. So it's all about what you're looking for. I'm saying if your minimum payment is due on the 25th and you pay by the 2nd and the 20th, does that, well, it's going to increase your credit score. Yes, because when it reports on the 25th, your overall utilization should be lower. That's why. So when it reports, understand the report date with that balance. You want to look at your utilization. So utilization is 30% of your credit score, the second largest chunk. So if you pay down your cards before that balance report, then it never shows up on your credit ever. And if you pay it off, so say for instance, I went on vacation, right? When this unfortunate event happened, I was on vacation. I put like $3,000 on my credit card, and to my surprise, it was a new card. So let's say it like that. It was a new card. I put $3,000. So a lot of times it take a while for them to report that. Let's say a good month. Oh no. And that's how, if you want to get your card to report, y'all, if y'all have a credit card that's not reporting, like, yo, I had it for, over 30 days. They ain't report this. You need to put something on it. They're going to report it with quick, fast, in a hurry. So they reported that because I used the card. I'm thinking I'm being slick. I got 30 days before they show up. They reported that in like 10 days. They reported that quick. Like, we reporting that. So it was a $3,000 balance on that credit card. So before this month was out, I just paid it off. And so when I paid it off, now it shows a zero balance. My score goes back up. Okay, so we'll use that example. My score goes back up. It only went up like 2 points because I have larger credit lines and I wasn't riding my overall utilization that hard. But if you're a person that had, say that's your only credit card, you only got one credit card and it's a $2,000 credit card and you put $1,500 on it, now and it reported, your card is close to being maxed out. So before that card report again, to leave that $1,500 on there, you just pay it off. And even if that report, now once it reports zero, you'll see your score shoot up. Okay, because it's about utilization. So you just got to know the time and the frequency. Okay, yes, make sure that the balances are low as possible. Exactly, Miss Jack. Before it reports, okay? Before it reports. So you're going to have 2 dates that you got to worry about. The statement date and the report date, okay? You need to call your banking institution to find out. Yeah, you can look on your credit report and they'll tell you, when the card report, and they'll give you a general idea. but you might need to call that credit card company, because sometimes that cycle, and some months, let's say like February, it might report 2 or 3 days later. Okay. I mean, 2 or 3 days earlier. It all depends. So to be safe, if I got a card that reports on the 25th, like you're saying, you pay it down by the 20th. You should be able to make that mark. So even if that cycle, because sometimes with their what is that, statement dates, some banks do it cycles, and it might be due a little earlier, and their report date might be a little earlier on certain cycles. So just make sure you catch it. I'll put it a couple of days before time. Okay. And you said call your credit card company. Yes, yes, and get the dates they report. Yep. So you want to make sure that y'all do that, because what you want to do is be very direct. Okay. And let me see. As Miss Jackson said, yes, discipline. It said because we're creatures of habit, and it takes time to heal that credit. Yes, it do. And the only thing, a lot of times, like you said, we're creatures of habit, but you can turn your credit around really quickly. Don't ever think that old, struggle tale that a lot of people try to feed you. Okay. I have worked with people. You can turn your credit around really quickly. And what I'm saying, it's all about what you're trying to achieve and what you're trying to do. Okay. Is what goal are you trying to accomplish? If you got enough time, let's say, for instance, I use this example. I had a lot of people with this. They want to buy a house. They got collections on their credit, or they're in the process of closing, okay, on a house. I have had this. If y'all don't know, collection companies are notorious for this. They have a trigger list. Remember, the credit bureaus are not your friends. They are in the business of selling information and your data. That's all they're there for. That's how they make billions. So what they do, when they see you pull to apply for a mortgage, they send out your information to all these collection companies that then come in, and you'll find when your score go up, you're applying for a house, them two things, you'll find collections, pop out the blue. When you're scoring the dumps, you ain't getting no collections. Ain't nobody checking for you. But when your score go up, say a significant jump, then you ever look up and like, yo, where does collection come from? Because they sell your information, and it hits a trigger, because they're telling the bottom feeders, remember, all these, they're all in bed together. Don't get it twisted. That's why the bureaus don't want to remove nothing. They ain't your friends. Remember, you are not their customers. The banks, the collection companies, and the landlords and everybody else is their customers, because they paid for that report. You're their product. That's it. You're their product. You're like the farmer and the chicken. The chicken is not their customer. Okay. The market is their customer. Okay. So understand, that's why they don't remove nothing, because the more negative stuff you got on your credit, you're considered subprime. Don't think the banks don't love that you subprime. They love struggle credit. The reason why they can give you those little credit cards for $300 and charge you that high interest rate. And you know what they know? You ain't got many options. So they can just charge you what they want. But when you have better credit, they know they got to have competition, because better credit means you're a better risk. So they like for you to have enough bad credit to justify why they charge you higher interest rates. Remember, banks only make money primarily on interest. when you learn the banks need you really more than you need them. That's the thing. The banks need you because all the banks don't offer anything but lending. If you got my books, I break that down. So the banks need you. All that stuff, the way credit is created, is the reason why the dollar is BS. If you know that, if anybody have any, you understand, our dollar is not money, it's really currency. That's it. It's a medium of exchange. Okay. And I broke that all down for you to know really the rabbit hole. You got to understand money. A dollar is a promissory note. Many people will say, oh, I only deal with cash. I don't deal with credit. Baby, cash is credit. Cash is nothing but an IOU. That dollar ain't backed by nothing. That's why those that follow me on Facebook, you already know I invest in, I actually not invest, I secure my dollar and I secure my money with silver and gold. Okay? That's my thing. Okay? Every month I have silver come to my home. I get gold from bullion companies. All right? I have a service where not gold but silver constantly come to my home. I do that. Okay? And then because it's a spread there between the gap between silver and gold. Silver is truly undervalued, and JP Morgan Chase is doing that on purpose. They're the largest holder of silver because if you know anything, silver is a great conduit for what you call commercial. It's a commercial metal. Okay, so for your what is that? Your solar panels, even a lot of these Tesla batteries and all these green energy things, they need silver. That's why they keep the price of silver down as much. They manipulate, and you look it up. JP Morgan Chase been fined time and time again for manipulating the price of silver. Okay, so this is why I secure my money with silver, or my currency with silver. So for every $100 I make, I buy a silver coin. It's a reason why it only takes 12 cents to make $100 bill, but a silver eagle, a U.S. silver eagle, which is valued for $1, costs you about 20. Well, actually, it's going to cost you about $40, $35 to get a dollar in currency, because it's actually real money. So I do real currencies in silver. I don't invest. If anybody know about silver or investing in silver and gold, I don't like generic rounds. I don't like to do that. I like real currencies. Okay, so actual U.S. money, or the Canadian maple leaf. So or things from the Perth Mint, I'll buy. I like the Cougaran. I'm gonna get real currency. So if anything ever go down, I know everybody love crypto, but guess what? When you over there, just like in Ukraine, when they shutting down the internet, they're shutting down Wi-Fi, they shutting down all this other stuff. How you gonna use your crypto? If power go out, how you gonna use your crypto? You ain't using no crypto. But a silver and gold, no matter where you go in this world, has just about the same value. You'll be able to barter that off. So that's why I try to get silver coins. So if anything happen, I know power go out, yada, yada, yada. I'm somewhere in Texas, and guess what? When that storm came through, some folk ain't have power. Where your crypto gonna be? How is that gonna be effective if you can't charge your cell phone and lights is out for a week? How is that effective for you? But you can dip in your stash. You could get your silver coin, and guess what? You can get something for that. If you got gold, I don't really like gold too much because gold. What company you getting your silver and gold? Right now, Quicksilver. I have my deliveries from Quicksilver, and that's who bring me that gold, either SD Bullion or Amex. So I'll see which one have the better price. But me myself personally, I get a lot of silver because silver is greatly undervalued, and it all depends on spot price and how they're manipulating the currency. A great other thing before you go, now I can be lazy, and so I might just go to SD Bullion or Amex, but great deals is at your local coin shop. A lot of times they can give you a better price closer to spot. So if y'all don't understand what spot is, on the currency market every day, they have a price set for silver and other precious metals, gold, platinum. They have a set price. So say silver, they're saying today is $25, spot price, right? $25. That is the lowest price. You're not going to get that. Only the big commercial dealers will get that for that price. You're not going to get that for that price. But you might go to your local coin shop where you can get that $1 over spot, $2 over spot, and yada yada yada. So usually the local coin shop, they might can give you a better price. You might go to some of the dealers and online, and they might be a little higher over the spot price. They might be $5. So you can get a lot more if you go ahead and do that. Another thing that you can do, what I suggest y'all to do, and I know this seemed like it's not off the path, because credit and the dollar is connected, because they create money out of thin air. So do they do with credit. Your money ain't nothing but credit. All right, that's it. That's why I like to do this business channel, because everybody think it's about the credit. I'm just giving you one part of what I'm talking about. This is why you should not work for this currency. That's why. Why do you think inflation is going so high? Because you had all this stimulus coming in, and it's not the stimulus that came to y'all. It's what they're printing for the stock market and the repo markets. That's what they're doing. They were printing billions of dollars trying to keep that stock market afloat. That's why even with that stock market, those stocks are overvaluated or it's overinflated. That's why everything. Don't think that houses is worth more now. Your dollar is worth less. They're lying to you. You see what I'm saying? They are diluting. So think about it. If you have a forest and each tree is worth $100, and then there's 1,000 trees that's worth $100, but then you add double those trees, 2,000 trees. Now the value of that tree has depleted because you got more trees. It's more supply. You cut it down in half. Now it's down to $50 per tree. So it's the same thing they're doing with your money. It's just like liquor. So when you in your younger days and you was partying, you knew which bar was going to water that drink down. You getting a shot. You don't want no ice in that, because the more water, the less potent. You're going to have to pay more to get the same buzz that you did prior to the ice. You're spending more at the bar. You see what I'm saying? And it's true. It's the same thing with your money. Same thing with your money. And they're playing a trick on y'all. That's why I say you got to get other streams of income. They're playing a game. It's to keep you a slave. Understand that. Understand, and I'm going to let y'all know who I am. They not getting rid of your student loan debts. Stop looking for that. They might get some of y'all, but not for real, for real. Student loan debt is the government slavery, okay? That is the cash cow, okay? They have, that's the modern day slavery. That's their biggest asset right now is student loan debts, okay? Because they're gonna keep working you like a mule. It's like the Matrix. It's a simulation, okay? It's a simulation. So think about it like this. Do the farmer really love his chickens? The farmer provide the chickens, the cows, the pigs, health care. And if you want a healthier chicken, you don't keep them cooped up. You give them free range. It's an illusion of freedom. Okay? Think about that. It's an illusion of freedom. And so when that chicken thinks it's free, it produces more. It produces more eggs. It produces more healthier meat. But when it's ready to take him to market to slaughter, all of them slaughtered. And it's the same thing with you. When you have an illusion that you're free, you produce more ideas. You work better in the system. It's an illusion, but you really under slavery. This is why a lot of these a lot of these wealthy people, look at the moves of Bill Gates right now. Look at Elon Musk. Look at Bill Gates is buying farmland. Look at Berkshire and Hathaway, which is Warren Buffett. They don't sit on really cash. They buy assets. They flip that cash out for producing assets. Okay? Because he that own the asset, the tangible asset right now has gone up in wealth by doing nothing. My house went up probably about 200 and something thousand in probably like a year and a half, which is unheard of, just by having an asset. And what I'm trying to tell y'all, a lot of people that just get my clips, they have a misunderstanding from what I'm telling people. You leverage your credit in order to get your hands on assets. You're not trying to just, when I tell you credit cards and to get this stuff, this is what's just necessary so the banks will deal with you. Because you're not going to get business credit without a $5,000 primary credit card in your own name. Dave Ramsey sit up there and tell y'all, I'm not against Dave. I believe if you don't have much self-control, or if you haven't had a knowledge of or the benefit of having a family, a parent that was financially astute, you know, those baby steps is good for you to have self-control. But they tell you your only debt you should have is your house. How you going to qualify for a house if you don't have anything on your credit? How you going to qualify? Oh, he was saying, oh, you can go to, if you got the cash, you can deal with creative funding, going to investors. They're going to charge you a higher interest rate. You got to have something on your credit profile, and in order to have a higher credit score to get a mortgage, you're going to need a credit card. That's what the credit system is all about. The real root of the credit system, I keep telling you, banks make money off of interest. If you can ever really grasp that, banks make money off of interest. They need you. So for them, the reason why credit cards have more value and don't decrease your credit score, like having, when I told you, you close out an installment account, why, you know, it's a different value. Why is utilization 30%? Why is that the biggest chunk? The reason why it's the biggest chunk, because it's a revolving account that never closes. They always have an opportunity to make interest off of you with a revolving account. That's why they rate it higher than other accounts, than installment loans, because they know that installment loan have an end date. It's an end to how long they can make money off of you. But with revolving credit cards, they have a chance to constantly make money off of you via the interest. So this is why you have to, like I said, it's different levels to understanding the credit system, but all of it intertwined to knowing what the market is doing and knowing what the root cause of all of this in the system, so you know how to place yourself. You want to leverage. A lot of people get bitter. Credit is not bad if you know how to use it. That's how you got to do. You got to know how to use it. Just like firearms is not bad if you hunting with them, if you're not robbing people, but different people, if you use it right, it could be good for protection. So it all depends on what you're using it for, what you're using your credit for. Most people use their credit to get debt. That's it. That's all they do. They get their credit to get them in deeper in useless debt. That's why it's good debt and there's bad debt. So it's useless debt. Don't forget, as Dave will say, oh, okay, don't get no credit cards. But he'll then turn around and tell you to invest in a 401k and in the stock market. Well, what is the stock market about? That's them raising capital, getting into debt. Stockholders are their debtors. So when they file for bankruptcy, just like Miss Jackson was saying, you can't bankrupt student loan debts off. But guess what? When they file for bankruptcy, they have to pay their stockholders in a certain tier, okay? But you will be at the bottom of the barrel, okay, on who they have to pay. But they're in debt. They're leveraging debt. And David tell you, well, don't bet on you. Don't bet on yourself. Don't get things for yourself. But you put it in their hands. The ones that caused the stock market crash in 2008. Yeah, you let them at it. And they got credit lines. Wow, do you think that they take their capital? No, they raise your capital. That's what they do, are offering. They're raising capital. They're getting in debt. They don't use their just cash. Why you think they got business credit cards? Because you use that credit card, that business credit card, that company, and to get credit, sell that product, make a profit, and then they have profits and pay off their debts. That's it. They're making money. They're staying in business. So that's all I'm just saying. You got to make sure you plan the same way for your own personal life and your own family when it comes down to credit. Watch what you investing in and watch what your agenda is for yourself, for your family. And this is how you're going to break that cycle of constantly having bad credit. Because if you constantly have bad credit, either you need to learn something about credit and then adjust your behavior. Credit is only an algorithm. It's like y'all playing a video game. It's a computer generated number. It's like playing a video game. All you guys that sit up there, them gamers, and you know how to hit the button at a particular time, that's how it is with your credit. That's how you got to do. You got to know what to do, when to do, and then you manipulate your score. And then you know what you're going for, what you're qualifying for. And then you have to have the streams of income. You got to have, if the highest form is selling a product, that's what you want to do. You want to get you a product or a service. But I prefer a product. And then you want to have certain streams and revenue of income. Don't just base it off your job. Just learn how to leverage. Okay, went on that tangent. Let me see if anybody else. And said because you need cash to pay credit. To live, if you ain't already heard, you should read Rich Dad Poor Dad, Robert Kiyosaki. Yeah, exactly. Great book. That's what led me to purchase my first rental property at 21. I read that book. What company are you getting your silver and gold from? I think if I didn't answer that, I think Quicksilver, and like I said, local local coin shops, and you can go to SD Bullion and also Amex. No power for a week for me, my kids, and our street. That's not a rolling blackout either. Oh, wow. I'm sorry to hear that. They lied about that. The street over from me didn't go out at all. Yeah, I think it was an infrastructure issue too, Miss Williams. Okay. And she says she needs to read that book as well. And you're right. He breaks it down Barty style. It's a great read, and it is very much so a great read. And also always remember all this information. Just make sure, try to execute it somewhere in your life so y'all can see, you see the results of things. Whatever you learning, even if you can't do it all, just take it in small steps and execute what you can. Because sometimes things, you might see things and it seems overwhelming. You might say, I never get there. But long as you're doing something, at least you're doing, you're taking steps. And Miss Jackson said, yes, I'm waiting to invest in real estate because these people are wilding with these prices. They are really wilding with these prices. So just make sure you take the time. And I always tell anybody that want to get into real estate, I'm going to do some shifting soon. Always do your research on where you purchasing and the landlord tenant laws. God for sure. Make sure you watching where you investing. You don't have to invest in your local market. Just make sure you invest that, as I said, in investing in real estate. If it's blue, it ain't for you. If it's red, you better go ahead. The blue states ain't where is that to be a landlord. Miss Jackson, okay. Steven said, "Yep, I have 228,000 in student loan debt. Please let me hit the lottery." Um, who knows? You just continue to work at that, or get some kind of side revenue to devote to that to get those student loans down for sure. Maybe you can also look at refinancing those if possible, if they're in good standing, and see if you can find a better rate on that, and look into some student loan forgiveness. So I'm sorry to hear about that. It is okay, and you can't file for bankruptcy now. To live, but this is true. How can rental properties be worth it if we go black and no power and internet? How can rental properties be worth it if you don't have internet or power? People always need a place to live. And at the end of the day, what dictate where you talk about is human need. The reason why Bill Gates is buying farmland, food, whoever got what people needs, they dictate what they want as payment. you know, there's been times people will sell their, unfortunately, they can be in extreme poverty, and you might see that many a times. People will sell their children for food, So, if you're controlling what is needed, food and housing, whatever you dictate as payment is really payment, depending on the desperation. So this is why the elite stay investing in things that is needed by you, like food and, controlling certain things, water, electricity. If they tell you that, payment is your firstborn child now, there's those that's out there that's going sell their firstborn child. And Shawnee said Bill Gates is buying the farmland for a farm so he can shut down real farmers so people can come to him for to get food or to get farm food. And another thing, certain administrations, I won't say to trigger people, put in certain bills where they can get rid of air seeds. You mean so now it's these genetic seeds that where the original air seeds, just original seeds, you could just grow yourself. But now they're making all these Franken foods and different seeds that it just don't grow for you in a particular way so that it can be commercialized and they can control the food. And when they can control food, they can control you. So that's a lot to it. And whatever people beliefs is, it is what it is. People say that's a conspiracy, but it is what it is. It's a reason why even during the pandemic, the U.S. government, the SDA, would have certain crops destroyed and certain cows and milk poured out. It's a reason. It's a reason. But now certain places have food shortages. It's a reason. That's all I got to say. Okay, a lot of people buy liabilities and not enough assets. Absolutely true. And so Steve said, I wish I graduated from John Carroll University. It was $13,000 a semester. I had no business going to that college. And it's the student loan crisis is a really big crisis. Unfortunately, it's a lot of misrepresentation when you're younger going to school. Unfortunately, it's just a whole nother different racket now. And so if people aren't educated on certain things, and I had fell into that trap, and then you kind of find out later on down the line when the noose is on your neck on how things work, unfortunately. So I even got a book on student loans also. But the whole thing is to have your kids, if you can't afford it to send them there, it's not good to take out student loans and getting people in debt where you can go to a junior college or a state university most of the times for half the price of what you're paying for, maybe even not even a quarter of the price, and then transfer to a 4-year school and graduate with the same degree and nobody knows the difference. So it's just really a new modern way to put people in slavery. Organic Butterfly said, Shawnee H100, yes, so he can make sure people buy food. Yep, fully GMO. You're right about that. The more you know, Steve, that's a wow. You are absolutely right. Anybody else? Okay. Lord Joseph said, how can you manipulate your credit score? There's ways that you can, like I said, by depending on number one, what's your current score, and what you're trying to do, or what you're trying to get approved for, or what's your goal. The different ways you can manipulate your credit score is by hiding utilization, certain ways that you pay your credit cards on time. There's certain ways that you can shift. You can shift your utilization from one card to another if you set it up a certain way, and your high debt that you might have on a credit card won't be shown. And anytime that you reduce your utilization, you increase your credit score, no matter really what your credit score is. But for your, if you're under a 700 credit score, by adding unsecured lines of credit, you can increase your score. and you don't have to remove one negative item. So those are some quick examples on how you can manipulate your credit score. So I go in a lot of detail, but if you give me direct questions, I can give you more details on that. And Miss Lady T said, "Hello, lady. I'm glad you're doing fine. You always bring gold advice to help us. Thank you so much." Son, you said, "Thank you for sharing everything. People are waking up. It's time to put it in action." And thank you guys so much for joining me. I appreciate it. Thank you, Miss Jackson. Shawnee, thank you. I appreciate you, Organic Butterfly. Thank you all. And Two Live said, "What is more valuable, buying property or land?" It depends on what your agenda is. So, Two Live, it's for me in real estate investing. It depends on what your agenda is and why you are purchasing the property and land. What are you trying to do with that property? Apparently, if you're going to be a farmer, if that's your industry, the land would be more important. Or if you're growing, medicinal marijuana, the land is more important. It depends on what you're trying to accomplish or what you're trying to do. If you're investing in real estate and buying land, if a person is a builder, then you're going to do new construction, then, the land might be a better option to go depending on what the market is dictating. Like, for example, if a person is a builder, there are certain times dictating on the market and how much is materials. Like lately, lumber's been very high. It's been a shortage of trades people. So, and in the pandemic, it was hard to get permits. So buying land to build at that time with lumber being shorted, and there was a supply shortage and everything was very high. For a person that's a builder, if he's looking at land or a property, it would have been better for him to probably purchase that home, already structured home, to renovate it and then flip it. So it all depends on what you're doing. So when you're talking about investing in real estate, you're talking about what you want to do. How are you gonna invest, and what way? Like with me, I'm not a person. We did some some renovations, flipping. I don't like that side of the game. For me personally, buying and holding might be, in my perspective, a safer bet for me than somebody. I had friends that were builders. They were, that was more lucrative for them. They made money faster, but it's a lot more risk in doing that, in my point of view. And when that 2008, 2006 crisis came through, a lot of them lost their shirts, so it all depends on what you want to see. For me, being a landlord, you buying a house at a certain price, there should be a yield on your mortgage, your utilities, and everything else of a return on your monthly investment. So, I mean, for what you got to pay for utilities, your costs, and then the rent price and how much you're going to actually profit every month. So you also get the benefit of not only just generating an income yearly that you should be able to time on how much you're making annually off of that property, whether it's another 50,000 a year, 60. It all depends on location, where you're investing at, location, what's the rental market dictating, taxes, also management of that property, and how quick you can get somebody out of that property. What's the landlord tenant laws there? So all of that come into play. But while you're making that 50,000, let's say a year off of that property that you're clearing, you are getting the benefit of appreciation of that asset. So that's where I see it. Not only am I making 50 grand a year off that property appreciate in value at the same time. So if I ever want to sell, let's say now I built over holding that investment for 10 years, I generated income, and then I can sell and still make a profit, a capital gain, even beyond the money I've been making the whole time. Now, that person that buy that land and flip, they made theirs up front, but they might have way more risk. They can lose their shirts, depending on how they getting that funding, hard money, loan. A lot of those have a balloon payment after 9 months. So you have to build that home, and you got to sell that home. You got to be out of that deal, because that interest rate can jump all the way up to 29% if you're not selling that home on time. And if that market crash, you can lose your shirt. You can lose a lot. So it all depends on what's in your skill set and what's best for you when it comes down to, real estate. That's just one example. People do wholesaling. There's different ways people can invest in real estate. Many different ways. People can invest in a fund. You can invest in certain funds where you're not physically doing anything. You're getting a return on your investment because they lend to certain builders or certain projects, and you get a return. So it's different ways to invest in real estate. It just depends on how you want to do it. Organic Butterfly said, I graduated from Grambling State University. Now I'm seeing some college advertise $1,000 per semester. Wow, that's great if they do. How do I get 2 collections off my credit? It's been they've been up there for mostly for 7 years. Okay, 7 years old. What type of collection is it? If it's a student loan collection, it's going to stay there because that is protected differently, unfortunately, with the government. So if it's beyond 7 years, if it's a student loan debt, you need to rehabilitate that loan, or you're going to have to pay that off. Those kind of collections are different. If it's just a regular medical collection or consumer collection, and it's been over 7 years reporting, you need to dispute that with the credit bureaus, and it's over the 7-year period, so they should remove it because it's been reporting for over 7 years and it's beyond the statute of limitations of that debt to be reporting on your credit report. So, in that case, then you dispute with the credit bureaus. Ms. T said, do you know a good personal loan company to pay down credit card debts of just $6,000? Or what can I do to pay them down? I've never been late on paying my monthly bills. Some of the options as live. One thing he was saying, is it good? You can just pay. I can suggest instead of doing a personal loan. I wouldn't suggest a personal loan. The reason why, because when you add personal loans, it's adding debt. And like I explained earlier, if you got more debt, the less you can qualify for if you go for a loan. If you're going to rent a home or buy a home or an apartment, now it look like more of your income is going towards that. So you can not qualify for a lot of important things. That's just my point of view. If you want a car loan, if you got a $6,000 personal loan, you qualify for less because you have this monthly obligation to pay for. What is your current credit score? Because one thing I can say, maybe if it's a $6,000 debt, if it's maxed out or where is it at. Maybe you can get a balance transfer if your credit is decent, to go for a balance transfer credit card, and then you can get a lower interest rate. And you can, as Two Live was saying, pay off your credit card. That credit card, you pay it off. If it's 6,000 on one card, or if it's separate cards, go with the card with I go with the you can do the avalanche paint method or the snowball method. And like he was saying, choose a card. If you want to go for the one with the highest interest rate and the largest amount, you can start with that first, and you can pay uh whatever your pay period is. I paid mine. I got paid weekly. I paid $50 every week out of my check for 4 weeks straight. Paid that. So that was $200, and plus a minimum payment. So you constantly do that, you will see you will see your balances go down, and you'll see your credit score go up. Or you can find, like I'm talking on my business channel, other means of income. Almost Dave Ramsey talk about that, delivering pizzas, whatever, Ubering, do some kind of gig work, do some independent contracting, and dedicate that to paying that card down. You can do that. Pay that card down. Make more money just to pay the card down. And this is why having other streams of income. So that's what I would choose, one of those two options instead of getting a personal loan. Or you can do the snowball effect, aiming at the smaller cards first. It helps your psyche when you get one paid down and done, and continue to go on. But I will aim for the option of paying either every week, every 2 weeks, whatever, and then the minimum payment, and getting some other revenue, because there's a reason why you can't pay that $6,000 down. Is probably because you don't have the revenue, and you're kind of riding high on your bills, so you need more income. So I would try to fix that. I have videos on my channel you can watch. It's something you can do right now in your local area, and you can make money and make your own schedule. So that's what I would do. To those two options. Those are the two options I have taken in the past, and not either getting a personal loan. See if you can get a credit card with a balance transfer, depending on your credit score, or pay it down. Trust and believe. Where people say, I don't have the money to pay that. You be disciplined, and soon as that paycheck hit, before you buy coffee, before you do anything, go straight and pay that bill. You'll get used to it, because you'll be surprised how much money you might spend. $30 at Popeyes, or whatever. All that, if you have less to pay at Popeyes, you'll be okay. Or, I'm just using that as an example. I ain't saying you eat Popeyes. I'm just using that as an example. Or less to pay at Starbucks, you'll be okay. Pay that card down before that Starbucks money come out. Or whatever that you doing, come out. You'll be surprised how quickly your balances will come down if you're consistent at everything. So, what we got? Got you. Miss T, I'm sincerely confused. Oh, you want to use okay, the pay off. Oh, and that's common of people using a personal loan to pay off a credit card, and because a lot of people, and it's not really a terrible thought, because like we're saying, utilization is 30% of your credit score. So I have heard a lot of people talk about, or I have heard other credit people talking about getting a personal loan to pay off your credit card, because people might be close to being maxed out at that credit card, right? So if they can take that personal loan, pay that credit card off, and that utilization is freed up, their credit score go up. But what they're negating to tell people, or I don't know if it dawns on them, you qualify for less by having now an installment loan. You got a monthly debt. So that's why people, if you ever heard where people get a line of credit, like a home equity line of credit, and they'll take that home equity line of credit or get a HELOC, which is a home equity line of credit, and there's people that pays off their mortgage, just pay the mortgage off, because at least with the home equity line of credit, instead of having a mortgage, which would be like a personal loan, an installment loan, you got a set amount. So if your mortgage is $2,000 a month, that's what it is, baby. It's $2,000 a month. That loan is $500 a month. It's an installment loan that never changed. But when you have credit lines, like a revolving line of credit, remember it's based off of interest. So when you start paying that down, the amount that's due monthly come down too. You're not stuck on that. So a lot of people have found, instead of getting those installment loans, like taking a HELOC loan out, a home equity loan out, and just paying off their mortgage, you reduce your costs because you're not stuck with a structured monthly payment for a period of time. So on one end, people will think, oh, well, my credit score go up, and so now my credit score is good, but you still qualify for less because now you got this debt that you're obligated to. So when it comes down to lending or whatever, or even applying for a credit card, now your debt to income is a mismatch. You can't qualify for as much. If you get a home, or you trying to do that to get a home, you can't qualify for as much, but your credit score is up. So you really, your best way is just try to pay it off without indebting yourself even more. So if you can still get that same effect, it might not be as immediately, but you're not going to snare yourself in another debt. You're not just shifting debt. It's best just to go ahead and pay it off. You consistent at anything, you're going to see results. So consistently paying it every 2 weeks, every week, even if it's $25, whatever you can do every week or every other way, and the minimum payment, continue to pay it down, you'll see that balance come down and your score start to go up. And then you'll be released of that debt. And just be disciplined and don't overspend on that card again. And I suggest still try to find other revenue, because apparently your real issue isn't the credit card debt. Is your real issue you don't have the money to pay it off is your issue. So you can fix the money part. That ain't going to really, because you can pay it. They allow you to pay that off at any time. The problem is you don't have the money. So fix the I don't have the money problem. That's what you want to do. And this is why I say the business channel, you want to fix the I keep telling y'all, the more money, the more streams of revenue you have, the less dependent I guarantee you become on credit. You won't need it. The less dependent you won't come on credit. There's certain things you put in place, like to be live, two live said, well, how do you break that cycle? One rule of thumb I have to control yourself: if you want a vehicle, and I think I said this before, if you want a new car, put it like this: if you don't have at least 2 times that car value in your bank account, you shouldn't be getting that car. Whatever you have, at least 2 times amount in your bank. So if you have, let's say, $10,000 in the bank, well, your budget should be a $5,000 car. And people will be like, what? Yeah, it should be a $5,000 car. Because if you ever get in trouble, you can pay that car off. I got 10,000. I'll be down 5, but I'm at 5. That should be your budget. That's it. You would never get in trouble if you got that going. If you want to put something on that credit card, I tell people simply, credit card is not a problem. Your lack of having cash flow and savings is your problem. Because if you always keep it a rule of thumb, if I can't charge anything on this credit card if I don't have 3 times as much in the bank to pay it off. So anytime I need to pay it off, it's paid. I ain't got no problem with it. I got it. I'm already sitting on it. This is why banks only lend to people with savings or who has cash flow. This is why. This is why when you go for a home, a lot of people are surprised. Well, I got the credit. I make the income, but you ain't got the money in the bank. You ain't got the savings. So what does that mean to the bank? You ain't disciplined somewhere. There's lack somewhere. That's how I go. And not only do you got to have that down payment for whatever is dictated to that loan, because a lot of you, I ain't know that. What do you think? This ain't 2006, 2004 when they was giving houses out like candy. They ain't doing that no more. That's said and done. That's done and done and done. That was years ago. They're not doing that 100% financing. I got in on that one too. But that's done. You know, they not doing that. You got to show and even then you had to show some savings in your bank account. They got to see you can afford the down payment, at least the down payment. And then you got to be able to, once you pay that down payment and the closing costs, you got to show down payment and closing costs. They want to see that you're left over with at least 2 or 3 months to pay that mortgage. So you want to have your savings. Banks don't want to lend to people that's desperate. When you say, oh, I got a need. Oop, denied. They don't want, no, they not here for that. They're not here for that. And a lot of people are very surprised by that. Banks don't lend money to you when you need it. They ain't how they roll. They don't want to lend to desperate people. This is why in the system, they're looking to see your hard inquiries because they already got the math already set down. If you're over 6 hard inquiries in 2 years, the reason why they don't like inquiries, it look like you're fishing for credit. It look like you're desperate. And they like, oh, that person got a financial issue. Why they got all these hard inquiries? Oh, they looking for something. They about to default. They got this all down to a science. So that's how, as 2 Live was saying, how I break this. See, knowing little things like that, you gotta not look. You can't look like a risk. You want to know how to make yourself look like a good risk. You know, you want to know how to play the game. One tip I do, when I'm going for credit cards, I hope all of y'all know you should garden. Once you get to a certain extent, to a certain credit score, you ain't just adding new lines of credit. You take a chill pill. You garden. You wait till some of those inquiries fall off, or you wait a year. You're only getting maybe 2 credit cards in a year. So you picking and choosing. And then it becomes a game of what looks better. Then you want to get top tier credit cards. You don't want garbage no more. That's what I'm talking about, a strong credit profile. You want American Express. You want Chase. You want more premium credit cards. You want better institutions. Not so much because you being bourgeois. It's because they already know, other banks know there's a high standard in order to meet that. The reason why banks know that it's a high standard for someone to have a mortgage on there, a real estate account with a mortgage, they know what you got to go through to qualify for that. That's why it makes you look like a good risk. If you're paying it on time, they know, this person had to go through some things. That mortgage company, they already know. Banks only trust one another. They don't trust you. They don't give a root and toot in what you're saying. That if you learn that, they don't care about what you're saying. They only trust you as far as the last bank trusts you. Your car loan, they only trust you as far as the last car loan company trusts you. If you already know how to manipulate the game and know this, then you'll understand how to play it. So they only trust other institutions. That's it. So this is why you want to learn how to manipulate that. Okay, they only trust so and so and so. So maybe you get an authorized user account to get yourself in the system for American Express. You over a 700 credit score, but you still at lower tier cards. So now the game ain't, oh, well, I'm just doing this. No, you want to try to make your credit profile look better. Okay? One thing that kills me with people. Oh, they got my old job on here. Girl, so what? Let that old job stay on there. You're too busy running your mouth. You got to learn what to do and how to do. Okay? You got to know what to do, how to do. Leave that old job on there. Do you know why they want to know what your new job is? And number one, if it look like you've been in a job for 20 years, you look more stable than a person that's changing job every 6 months. You look unstable. If you always moving, well, all those addresses, that's why you want to get those addresses off. You look unstable. If you got a mortgage, this is why your car insurance is cheaper. When they say, hey, on your credit card, y'all don't notice that on the application? Do you rent or own? Why are they asking you that? You ever stop to think, hold on, why they ask me that? Think about that. Your insurance company. I was a insurance producer, insurance agent. You know why they sneak and act? Do you own your house or do you rent? Your premium is based off of that. You know why they know? They got actuary. People that own stuff ain't doing what people that don't own stuff do. You taking less risk. You got more to lose. So you got to think about that with your credit profile. Because what they are seeing, see, poor people judge you by your liabilities. Wealthy people and banking institutions judge you by your assets. That's the difference. So you got to get your realm of thinking. You don't want to be stunting for the gram. Forget about the gram. Forget about so-and-so down the street. Because a lot of people that say, I got credit problems, really got emotional problems. They really got insecurity. Because they got to keep up with the Joneses and keep up with so-and-so got the new whip. And then if you can see so-and-so in that Gucci bag, in that Birkin bag, in that new car, that whatever, 745, whatever they leasing, because they ain't buy it, because even wealthy people don't buy foreign cars. Most of them, you gonna lease it because you're gonna take such a hit. I constantly buy BMWs. Don't nobody, if you want to get that, the game to that, you get it off of, you don't go and try to finance that car. Why would you try to finance, and that's, let me deal with this all the way. Why would you try to finance a G-Wagon? A $90,000 car that when you drive it off the lot, it drops 20 grand in value. It drops 30 grand in value. That is silly. So even wealthy people, they lease those cars because it just don't make sense to finance it. And then those people in that category, once they do that, they want to switch cars up. So most of them lease those kind of cars. But you got other people, if you knew better, you do better, you get that used. Why? I'm going to let you take that hit. I worked at an insurance company, and let me tell you, doctors, especially some people of certain ethnic groups, honey, they buying used. Before they even consider that card, they calling in, hey, check this VIN number, check this VIN number. I need the deal. Which one is cheaper? Because they're not putting money into that like that. It's a way of thinking. So most of those people that if you into shining for somebody else and you're not really into living it and it reflecting in your bank account for you and your assets for you, your cash flow for you, baby, you going to be messed up every time. Because if you can see them, guess what? They on the same level as you. Don't be fooled. I ain't never went on vacation and seen Bill Gates chilling at the pool. Never seen it. I ain't never go on vacation and bumped into, hey, is that Jeff Bezos? No. Me and him don't shop at the same Whole Foods that he owns. I never bumped into Elon Musk. You probably didn't too, because those kind of people pay to stay away from poor people. Me and my husband went to Puerto Rico and we was looking at the Ritz-Carlton, and the Ritz-Carlton to stay up over there is bare minimum $6,029 a night, maximum $25,000 a night. And I said, I'm looking at the amenities. What is this? We staying in a beautiful resort, but hey, what is this? They paying that? What's the amenities over there? Seem just about the same, but they paying not to be around poor folks. That's what they trying to do. So understand, don't get caught up in this game where you trying to keep up with the Joneses, okay? Don't try to keep up with the Joneses. Some of the things that's wrong with folks' credit is your insecurities. And you got to get control over your emotions. That's what your real problem is. Because once you do that and you stop, as Dame Dash said, I hustle for my last name, not my first name. When you start focusing on that last name, generational wealth, that I'm trying to put my kids in a better position than I was in, that should be your focus. And the reason that should be your focus is because who knows what life going to bring. We just came through a pandemic where folks was dying left and right. Systems changed. You was forced, certain folk, not I, to take. That's all I got to say, because I don't need to be blocked. Y'all had y'all opinion, but I'm rolling with Kyrie Irving. I ain't getting nothing, okay? I ain't getting nothing, okay? I wasn't doing it. Wasn't doing it. Other folks had to do that. Other folks had to do that because they had a job. I didn't have to do that. I ain't never get no COVID. My husband ain't never get no COVID. My baby ain't never get no COVID because I was my butt in the house. But that was from choices that was made. The point is, who knows what's the next thing's going to come? Maybe your children ain't going to have the opportunities that you have now. And you need to think about that. You might be the difference between your children starving. You might be the difference of changing your whole family's trajectory just by you and your opportunities that you have now. Because it's never been a time in life when I was first learned about this information, I ain't got the benefit y'all had. It was 2000 when I wrote in my book. I was getting my second house. I didn't know. You ain't had an internet where people like me telling you for free game. You can come here on YouTube and you can learn whatever you want to. A lot of people, I had to, 2006, I was working full-time jobs. 2 8-hour full-time jobs with kids. When my mom took my kids from me because of my work schedule, I said, well, I need to get another job. Okay? 2 jobs. And I had 2 houses at the same time. 2 income properties. You know why I got that second job? Because I'm going to get it going. I want to increase my income. I didn't have the benefit of what y'all got now where you could do gig work. You had to show up in a time frame. Y'all in the greatest time. A lot of people, if I wish I would have known that what you teaching way back when, baby, you in the best time of your life. You just got to stop playing. That's what you got to do and see what's in front of you. You in the best time of your life. Because guess what? You can make money and you ain't got to be there all the time. You couldn't DoorDash. You couldn't do all of that. You couldn't do some gig work when you felt like it. You had to go to a second job before. So now there's no excuse for anybody not to make money. There's no excuse for anybody credit not to be good. Because some things, if you got to go, and I don't want to get on my soapbox, but let's keep it real. Some folks, I have dealt with them, they want to burn everybody. And let me tell you, you can't burn everybody, because where you going to live? Where you going to go? You can't burn American Express. You can't burn Navy Fed. They don't want to pay nothing. You might got to go and mend some relationships, because guess what? After you done burn American Express, Chase, Navy Fed, I done burned everybody. Well, where you gonna go? When you burn all your houses down, where you gonna live? You're gonna be in a little tent. You're gonna be at the first premieres forever. And who wanna do that? You want a quality of life. You wanna actually go somewhere. So if you think that I'm just gonna burn these people, dispute this off my credit, and some people, I'm going to file bankruptcy, Chapter 7. Why would you do that when you're going to have that on your credit for 10 years, struggling for 10 years? Those people ain't going to see you once you bankrupt that off. You can just go ahead and mend that relationship. Just do a payment plan with them folks. That's it. Some people make it so hard. Go, hustle, get you a gig job, and start paying folks back. Your credit will be back on top. Probably once you pay those debts off, I tell y'all 90 days, you can get your debt coming up. I already showed you the testimonial of a gentleman that got foreclosed on. He gave the house back. And I said, we got to stop this from reporting. That's what's dinging you. Or we can get you back. Had high income, very good income. Like $150,000 a year, good income. 4 months, back in the 700s, Navy Fed came right on through, gave him a $20,000 credit card because he made good income. And guess what? Once you stop the negative item from he surrendered it, the house, the bank was able to recoup back, good to go. Sometimes you got to consider not collections, but if you got charge-offs or whatever, you might need to kind of mend some relationships. Everybody, well, I ain't got the money. Well, maybe you need to create the money then. Maybe your problem is the money part. Just go on and pay them and keep it moving. Don't think Sherry, as I was saying, triggerless, come up, was in the middle of a closing one time. Guess who popped up? A collection. And I had paid them. But guess what? My deal was on the line. So you know what I had to do? Because you know what the mortgage company said? This ain't cleared, ain't no closing. So I wasn't going to get up off no property where I had a income property over a $500 collection. Yeah, that's going to hit me. I'm going to pay them. And this was some time ago, but they got me. That's what it is. So guess what? I just paid them folk and I was able to get my house. And then you can work around some things. That's all it is. It was a paid collection. It ain't the prettiest thing on your credit. Now that was when I was that was over 20 years ago. I understood the game. I understood they was conning me. Yeah, that was like 2006 or something. I knew they was conning me. I knew the game. But for me to get my agenda done, to get another guess what? I just paid it. Because you know what? It's about strategy. It made better sense. So sometimes you got to look at your situation and say, what makes better sense for me? Some of y'all, if you're in the process of closing on a home and a collection come through, you can try. If it's a medical collection, always make sure that your bank, or I mean, not your bank, your health insurance ain't pay them. And if you can get the proof, but if not, and it's going to cost you your closing, you might have to pay them. And just keep it moving. Sometimes you just got to take that L in order to get the win. That's what it is. Sometimes when you play chess, you lose the queen to check and mate to win the game. So sometimes you might have to lose a piece to win the game. So that's what you got to think about it. You got to think, what's your best option? Okay. So always, if you're dealing, I give y'all hacks to get your score up. But if you want to get down better to getting your credit score, you're going to have to look at your position and what you're trying to get accomplished. You don't want to die with an 850 credit score and be broke. What good is that going to do anybody? You got an 850 credit score and die broke. And let me give you a piece of information. Once you get to a certain age, these folks ain't stupid. They ain't trying to lend to you like that. Okay? You start reaching some 70s and up in the 80s, baby. They ain't trying to lend to you like that because they don't want you to die on them. And you owe this debt. They don't want that. They not trying to play that game. So you need to learn how to leverage your credit to get you where you need to be in a better position for you and your family instead of all that foolishness. That's all I got to say. So they, Miss DeCosta said they are credit cards and they dispute, they won't take them off. They are at 7 years. Are they at 7 years or where they at? They at 7 years? Or they are, because it's like 7 years and like 6 months. So make sure it's right. If they're credit cards and they at 7 years, I am not an attorney and I don't constitute this as legal advice. If it's like over 7 to 8 years and they're not taking it off, I'll sue the company that's reporting it. Small claims courts. Just make sure that it's over. If it's a collection or whatever, it's defamation of character. Number one, I don't owe y'all nothing, and it's over 7 years. This shouldn't be reporting. That's what I would do. See my other videos where I break that down. But if it comes and it's incorrect, then make sure you check that statute of limitations in your state for that debt. But if it's a collection, yeah, I'll sue them to get it off. If it's over 7.5 years and they haven't took it off for age and you truly disputed it and it's been over 7.5 years, not saying you disputed it, I tried to get it off 6 years, then that's where I'll go. That's where I go. You said, Miss Lady T, you said your credit is 625. What are you trying to accomplish with your credit score? Or what are you trying to do? Just give me that feedback. What other methods can I use to get them off? I get in touch with you. I just told you. Then you're going to have to sue them. Or you, other option, if they're not taking it off, it's over 7 years, put a complaint with the Consumer Financial Protection Bureau. That's the only thing I can tell you to do. If you got your proof, if you sent it certified mail and you did 2 or 3 rounds to try to get it off, then I'll submit my complaint with my proofs to the Consumer Financial Protection Bureau. You just go online and submit your evidence and your complaint. If that don't work, then I'm suing somebody. That's what I'm doing. That's what Sherry did as an option. That's what I would say. And dispute and ask them for the original documentation. If it's a collection, go see my videos about collections. If it's a collection, if it's the original creditor, but if it's a collection, go see my videos about collections. Because with collections, like I said, a lot of this, instead of dealing with the bureaus, if it's something like with collections, you can stop all of that just with a small claims court lawsuit and just get at them. And I name names. I sued the company and I named board members for defamation of character. Let me show you how you lied on me. I don't even know you. I never got anything. Oh, but you from Capital One. I know Capital One. I don't know you. I never got anything for you. And so where did I agree for them to sell that debt? What contract do they have that I agreed? I pay them, but I don't know you. So if they never gave you a goods or service, an Apple or Uber ride, I don't owe you nothing. That's defamation of character. That's it. I can prove defamation because I got my credit report. I don't know you. I never got anything from you. So you're defaming my character. So I'm not only am I suing the company, the important part is the people. So if y'all keep playing around with me, the president, vice president, and then I go to LinkedIn and I get some customer service reps and some low scale people that's going to make it shake when at the job they get a lawsuit for somebody they don't even know. They going to go in there and say, hey, settlement. And then I call in once they get served with that. Hey, let me get your legal department. I'm the one, I got a lawsuit against y'all. And then they usually settle, take that off, report it as paid as agreed. In 30 days, if they said they can't do that to the bureaus, well, we'll just remove it. Let them remove it. Always remember, the one that is reporting it can get it up off your credit faster than the bureaus will take it off, faster than that dispute. So that's how I play it, okay? So if you ask me, those are your options. Oh, I got me a car for $5K. That's right now. I know that's right. You're right. Being a property management, when I see any anxious person and they want an apartment real bad, I push it. Okay, that's beautiful. I lease every time. That's beautiful. At least it's somebody out there working with people. I know that's right. Hello, hello, hello. I hope you are well. Love and prayers. Thank you so much, Maria. Thank you for joining me. I want to make sure I caught everybody. Okay, 2002 prices will make you buy all and only great value products. You're right about that. All right, everybody. I hope. Thank God I didn't file bankruptcy. Y'all, please consider not. Kingdom Living, thank you for joining me. Connie, thank you for joining me. What do you think about self loans? I'm not a fan. Like I said, I'm not a fan of adding debt onto your credit report because you don't qualify when you're going for loans because you have that debt there, that self-builder loan. So you can qualify for less if you're going for a home. Imagine that if you're going to qualify for a home, they're looking at how much income, and then they look at your credit report and see how much debt you have. And then that's what your disposable income that's left over is what you can qualify for that mortgage. So by adding that self-builder loan, you added debt. So I'm not a fan of adding debt. You can add unsecured lines of credit, which is credit cards, and still build good payment history. So why would you need to add debt in order to do that? So that's my take on it. And adding unsecured lines of credit, if you're under a 700 credit score, increase your score at the same time, and you can build good payment history. And you are not looked at as debt if you haven't maxed out that card if you're going to get approvals. I don't blame you, Sherry. I would have done the same thing. Thank you so much. Hey, everyone. It said, my question, what advice would you give for a voluntary repo? Are you going to do a voluntary repo, or you did it in the past? Because if you did it in the past, you would have to dispute it. It's just like a regular repo. So it depends on how it's reporting and what time frame, how long ago you turned in the vehicle. So let me know on that. I'm trying to get a home. I have no hurry. I'm just trying to get things in order. And that's always good, Miss T, to do that. Just to get things in order. And before you get your credit report pulled, when it's time to go, make sure that you just talk to different mortgage brokers before you pull the trigger, and let them know what's on your credit. And sometimes some things you don't have to pay off with certain programs, and sometimes they might tell you a definite. So you'll deal with those things before having them to pull your credit reports. Because when you go for a mortgage, they pull every credit report across the board. So you don't want to get unnecessary hard inquiries. So that's for everybody that's looking for a mortgage. And Ms. DeCosta said, thank you for the information. How I much appreciate it. How can I speak to you via phone, and what is the fee? I don't do consultations anymore, but if you want to shoot me a question, you can do it via my website, but I'm no longer doing credit consultations on that. But if you got a particular question with more details, all your questions go to my cell phone, and maybe I can be more of service if you need help. It just seems like it's too long for credit card. It seems. Check out my video with what I was talking about with the what did I just say, the recent video I did with extra debit card, credit cards. Try that, and you can find credit cards. I got a course with a list of credit cards according to your credit score. Y'all can get credit cards. Like, credit cards really is not a deal. I don't understand why. You just gotta know where to apply according to your credit score and how to bill. So I do have like courses on my website on how to increase your credit score and get more credit card approvals. So it's very easy to get credit cards. It's just, you just gotta know where to go with your credit score and your credit issue. That's it. So I've done it and disputed it several times to almost 2 years. I paid a credit person and they couldn't remove it. So it's is it with a collection company, or is it with the same company with the repo? Let me know who's it with, because I have a letter with a repossession. If you disputed it, let me know what the status of it right now. Is it with a collection company, or is it with with the original creditor? Let me know about that. I've got an email that I can send you. I've got an email. No, you just contact me via my website if you can. Maria from Viatory Repos. I'm glad you're back. Sorry for the loss. Oh, thank you, Connie. I appreciate it. What's your web address to send a message? You know what I'll do? I'll put it in the description of this video, or you can go to any of my other videos and I have it there in the drop down section, because it's a quick guide on how to boost your credit, but it's kind of long. It's best if you can hit the link there. It's with the same company. If it's with the same company, I have a letter at my website. The things with repossessions, what you can do is send them a letter and you want certain proofs, because number one, they supposed to give you an opportunity to get the car back within days of taking the car. So they should have sent you a certifying letter. So if they don't have that proof, that's one thing you can push them on. The second part is they should have told you or have proof, or they should have actually allowed you to, before they sold the car at auction, allow you to come to the auction, and you want proof of that. And if they did not, and if they sold that car at auction, you want to know what the car has sold for, and you want proof of what they're saying is owed, the balance that's owed. You want to see where that is in the contract. So I have a letter. Instead of disputing with the credit bureaus, you send that directly to the current company. And another option, if they really ask for those things, another thing, worst case scenario, if it's with the original creditor, see if you can settle the debt. See if you can ask them, if you pay a certain amount, can you do it as paid as agreed? And you said Capital One. So do those things first. I have those letters at my website. It's the repo package. And that's what you do. You will send that to them directly. I have 2 credit cards that I don't use. Is it bad to cancel them? Yes, it is. Because you'll reduce your overall credit. But sometimes it depends. If you cancel them, just be prepared. Your credit score is going to drop. Okay. Sometimes if it got an annual fee that you don't want to deal with, yeah. But if not, your credit score is going to drop. Yes, I have been watching your videos. Oh, they work. Just patience and wait every month. For the lower your utilization, it seems like it takes too long. What you can do, Connie, is find ways. Like I said, DoorDash. I got things on this channel where you can do to make money, and you can just begin to pay down that debt. So that's what you can do. And you can do these things at your own, set your own schedule and your own free time. So that's just the thing I would say. And you said no certified letter. Well, you can dispute and try to do it with the bureaus with a certified letter. She should have always sent a certified letter. They didn't get anything about the auction, but I did see an email saying, well, no, they need to send you something certified, and you want to see some proof on what the total that they're saying that you owe, that they didn't recoup on the car. And thank you so much, everyone. I appreciate it. I'm going to close out. I hear my baby crying. So I want to make sure, I might have to go in here, and she might be giving my husband a go for his money right now. I'm just going to ask this one question. Thank you, everybody, for joining me. What if the repossession was paid off in the auction so much that you owe money, but it's showing on the credit as well? How do you know, Miss Jackson? Did they send you a letter telling you how much the car sold for? If it sold above that, you should not owe anything. You got to pull out the contract on what they're saying. So, but if they're saying you still owe money, you need to know how much, because this is the thing that people gotta understand. Cars is depreciating items, right? So they don't increase in value unless it's an antique car, and that takes a long time. But unlike houses, increase in value. So as soon as you drive that car off the lot brand new, it depreciates by $10,000 to $20,000. So when they sell that car, depending on how much your loan is, they're not getting the value of the loan of the car. But if they auction a car off, it's generally going to be for what's less than what's owed sometimes, or the majority of the times, but they have to show you what's the deficiency. And a lot of times they tack on other fees that might not be in the original contract. So that's what you want to challenge. How to get rid of a charge off, and how to get a credit card with a soft pull, but give me a higher credit card limit. You'll dispute a charge off or with the credit bureaus directly, or if it's a charge off, depending on with the company, if you want a relationship, or you can call the company to try to remove it by paying them to settle the debt. You can ask them to do it paid as agreed. If you want a soft pull credit card with a higher limit, I always talk about looking for furniture account, because they usually give you a higher limit of credit or a line of credit at a higher limit, because like furniture is a bigger ticket item. And once you get that line of credit, then you can many times then apply for a bank card. So when they give you a higher line of credit, that next company is more is more willing to give you a higher line of credit because the prior company did. And plus, when that line of credit report, you want to let it report first before applying for another card. If your credit score is under a 700 credit score, and I'm going to say this like a broken record, you should see an increase in your score. And so that should qualify you with the increase in your score many times for a bank, a different echelon of bank card. Okay. But what you want to do is do your research depending on what negative is reporting on your credit. Okay. So if you got a current charge off, I went and go to Discover, American Express. Some of those guys is going to be out the picture. You might have to look for store cards. I have a store card that's co-branded. Like I think Walgreens have a Visa or a MasterCard. And so getting some of those store cards with a Visa logo. Now, what you can do to find those, I have a whole bunch of those on my channel, on my credit. So you just go down and find them and see the requirements that I got broken down. Pre-approval credit cards, and some of them I'll say credit builder or whatever, and know your credit scores, because I'll break down the detail on each one, what's the minimum credit score and where they will be pulling from. So that's how you would do that. All right. Thank you, everybody. I got to go. Thank you for joining me. Nicole, I really appreciate it. I'm glad the information can help. Maria, they want a signature and phone call. Who? No, I wouldn't give nobody a signature and phone call. I don't know what you're saying. I wouldn't give anybody a signature. Let everybody send whatever in writing. I don't know if it's a collections, but watch them phone calls because they record it for a reason. So watch what you say, because you can reactivate a statute of limitation, especially with collection companies. Watch what you say on the phone. If you need more information on that, I suggest you watch my videos on collections and also charge-offs. So be very careful. They record that conversation for a reason. So watch what you say. Good night, everybody. I hope to see you guys next week. And thank you. It said, thank you. I received a secure card, and because of you, boost my credit. Oh, congratulations, M&M Love Forever. Thank you so much. And keep pushing on your credit and keep going. So y'all have a nice night. God bless you.